Sea Limited stock was soaring for 2025. That is until September when the company hit a wall and the share price started declining. Of course, my recommendation and my ratings on Sea Limited were almost exactly on point a year, which rarely happens. I had Sea Limited stock rated as a buy all year until September 9th, when I downgraded the stock to a hold and informed investors that it was a good time to take profits. That was when the share price was around $200 a share, and it's now fallen down to $136 a share. So investors are now asking me if the stock is a buy on this dip and why is the stock price falling. So I'll answer those questions in this video.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So you can see those share price movements I talked about on Sea Limited stock as it soared to begin 2025. Of course, it crashed during around April when the tariffs in the United States were announced against all its trading partners. And then the stock recovered, rising all the way close to $200 a share before crashing back down to $136. And as I highlighted, I had the stock rated as a buy until September 9th when I updated and downgraded the rating to a hold, down from a buy. And I told investors that if you had owned this stock up until this point, it was a good time to take profits because the valuation was getting stretched and I saw increasing competition from Mercado Libre, Grab Holdings, etc. that was limiting its growth prospects. So over the previous 30 days specifically, Sea Limited has seen its share price decline by 22%. And one of the biggest reasons was an earnings miss in the most recent third quarter earnings report, where the company reported an EPS of 59 cents per share, which fell short of expectations by 43 cents, despite revenue exceeding forecasts at $6 billion. Analysts were optimistic about Sea Limited. Deutsche Bank and Barclays upgraded the stock and saw that as a positive following the quarterly earnings results, but investors were not moved by those updates from those institutions. The biggest headwinds right now are coming from increased competition from rivals like Mercado Libre in Brazil and Grab Holdings in Southeast Asia, and that's intensified market pressure on Sea Limited. Anytime you have increasing competition, it's typically bad news for investors, and it also depends on what type of competition. The most detrimental type of competition is price competition, where companies are cutting prices to attract market share. That's not the case here with Sea Limited. It's a competition with increasing supply, increasing advertising, increasing products, increasing product features. And that type of competition is less strenuous on investors than the direct price competition trying to attract customers. Now, the economies where Sea Limited is operating, including Brazil and Southeast Asia, are going to experience a slowdown in their growth prospects as a result of the tariffs that the United States placed on its trading partners. That's going to slow down worldwide economic growth in the United States as well as every other place in the world that trades with the United States. The United States consumer fuels a lot of the growth around the world because of the relatively large purchasing power exploited by U.S. consumers, and businesses around the world target U.S. consumers because of their purchasing power. And even if you're not directly selling to U.S. consumers, the business that you're operating is likely impacted by the U.S. economy. For instance, if the U.S. economy is not purchasing, if the U.S. consumer is not purchasing as much from China and Southeast Asia, a lot of the manufacturing that happens in the products that U.S. consumers purchase come from Southeast Asia and China. And so the tariffs are likely to make it more expensive for U.S. consumers, and we've already seen a slowdown. And so if those economies have slower manufacturing growth, like in China, in Vietnam, in Indonesia, in Malaysia, in Singapore, those manufacturing businesses will cut their hiring and cut their spending, and that will impact consumers in those economies because they will see fewer job prospects, less promotion, less income growth, and all of that will slow down the economies in that region specifically. And since the United States increased tariffs on all of its trading partners, it's going to slow down growth in all parts of the world. And C Limited will experience that headwind on top of these competitive headwinds against Mercado Libre and Grab Holdings. So I calculated a fair value for C Limited at $146 per share, utilizing my proprietary discounted cash flow model. And the stock price is now down to $136. Applying a margin of safety, I can say that this stock looks fairly valued based on the current market prices. But I also like to look at valuation on a forward PE basis. And my preferred data source is fiscal.ai, where I retrieve these types of charts, including market multiples. They're actually running a Black Friday sale right now where you can get all of their services at 30% off. I think it's a great deal. There's a link in the description if you're interested. So C Limited is trading at a price to OCF forward of 17.8, which I think is fairly valued. And similarly, it's trading at a forward PE of 31.6, which looks fairly valued to me. I mean, if I compare this to Amazon, Amazon is trading at a similar valuation here. And comparatively speaking, I would rather own Amazon than C Limited. And I actually do own Amazon. I recently bought Amazon stock, about a month ago, I will say, and it was trading at this similar valuation when I'm looking at it on a forward price to earnings basis. So all that being said, what do I think about C Limited stock now after it's down by 22%? Well, I like the stock a lot better now than I did a couple of months ago when I downgraded it to a hold, but I don't like it enough to upgrade to a buy just yet. It's getting closer, but it's not quite there yet because over the previous 2 months, we've had increasing headwinds. We've got increasing data coming in about the slowdown in the worldwide economy, in the United States, etc. All over the world, we're seeing a slowdown in economic growth and increasing competition, because when you have less growth and you have established businesses that have significant or established manufacturing capacity, they're going to want to utilize the manufacturing capacity they have in place. So there's going to be increasing competition as growth slows down worldwide. Not exactly a moment where I would want to own C Limited. If I was interested in this kind of a stock, I would prefer Grab Holdings actually as the better buy. It's a closer comparison to C Limited, or even Amazon I would prefer over C Limited. By the way, did you know about our exciting channel membership program? You get so much for less than $5 a month, including dozens of exclusive videos, access to exclusive research on over 100 stocks, and early access to many of my videos before everyone else sees them. Click that join button below to learn what this program is all about.